Porinju, I was reading some of your views, and you are one of the strong believers who believe that the rally in market has just started, and India has a long way to go as far as bull market is concerned. So where is this conviction coming from?
Good afternoon, I'm here. This conviction is basically, I would say, it's because of the big picture view on Indian economy and the country as such. And looking at that, I have been very bullish. Nothing new. Nobody can say the bull market has just started. It has started long back. What I have been talking, this market or this market structure, what's happening now, this is going to be there for a very long time to come. It is not going to be a 1 year, 2 year rally and it settle down. And it's really funny. People start talking about bear market and market crash kind of things, just because of the high price earning multiples they see, and they correlate it with some earlier occasions in 2008 or 2010 kind of timing. See, none of these things are going to work. Indian markets are in a structural bull run. It will continue for next maybe couple of decades. And basically this is going to be an investors market. Traders can do anything, any time, but otherwise investors are going to create wealth, a superlative wealth in the coming years and perhaps 1-2 decades time. Basically because Indian economy is very small at around $2.3 trillion today. And we are going to witness it moving to $4 trillion, $5 trillion and $6 trillion in the coming few years time. So this is a very transformational period, and it doesn't make any sense to be too cautious and pessimistic in the market in India.
That's true.
Yes, Mayor.
Absolutely. Now, one more thing, Porinju, is, a lot of people, and especially nowadays when Sensex is knocking at 35,000, if you speak to a lot of advisors, their view is that, yes, the long-term story is intact, but in the short term, the markets are overbought and there is a lot of froth in mid-caps and small caps. But at the same time, we have seen, I would say, fantastic outperformance in small cap and mid-cap category in some of the quality companies. Now, around these levels or around these PE multiples, are you still finding it comfortable, the investment opportunities in mid-cap, small-cap space? Or for the time being, would you like to look at some of the larger stories or large-cap stories?
We need not really differentiate the small cap, mid cap, large cap here. This market is an ocean of opportunities, and there are great opportunities even at this point of time. Despite all those aspects, what is see now advisors telling, cautioning, it's always happens. It has been happening with a lot of momentum in the last 1 year. Throughout the 2017, the skeptics have been talking and cautioning people. It's very easy. It's a very easy stand to take in the public discourse. It's very safe to say be cautious, be cautious. You are very safe. Nothing will happen to you. So, but there is no takeaway from those kind of warnings or caution. So that is I don't appreciate that kind of cautioning without the proper rationale behind that. And I feel investors have opportunities today and going forward for the next many years. So you have to look at certain themes which is relevant for India in the changing structure of Indian economy, which companies or which segments are going to create wealth, and which pockets we are going to grow very strong and much bigger, much larger. So if somebody with a common sense approach, understanding the macro picture on India and being a bit optimistic, which is always required in life, there are great opportunities for stock picking.
Right. Now at this point, Porinju, if I was to ask, are you fully invested or have you taken some money off the table? Because the kind of returns that we have seen in some of your own investments also, they are quite fantastic. So, we know that some of the stocks in your portfolio as well have almost doubled in last 4 or 5 months. Have you taken some money off the table or are you still buying?
I occasionally take some money off the table to buy provisions at home. Otherwise, I am fully invested in the last 5 years in the market.
So at this point, now, obviously because we are speaking before the budget, now one of the strongest conviction that market has and especially post Gujarat elections, is that this year the budget, since this is the last full-fledged budget of the Modi government, it will focus, it may not be a populist budget, it will still be a reformist budget, but the focus is going to be on the rural India, on the farmers, on the common man, and they are all somewhere linked to the smaller and mid-cap companies that we often talk about. Do you also believe that the budget is going to focus on these three categories, or do you expect an overall transformational reformist budget?
I don't know this too much technical jargons here. See, budget is going to focus on income and expenditure of the country, and this is a regular exercise we do every year. Investors will not have any huge surprise on the negative or positives from the budget. That times are over. Now budgets are very quite almost a non-event. See, market has got a direction now. Our economy has got a direction now, very different from earlier time. So that will not be disrupted. Now, some people talk about potential about, the change in the long-term gains taxation or the short-term gains taxation, how the capital gains are going to be taxed. I heard many people have been very skeptical, apprehensive about, a tax if it is introduced that markets may crash kind of thing. I don't believe in that. I am for that, a little, some 10% tax on the long-term capital gains. That looks very decent and something very, very good. So because of that, nobody will stop investing in equities, even if it comes, So I don't think any provisions which are going to be a game changer, either side. So the general investors can ignore the budget is what I have to say, and and focus on stock picking. See, now we have been, companies in India, the way they have been creating wealth. Now recently I was talking, when HDFC Bank was just around 500 crores market cap in the mid-90s. It has come to 5 lakh crores of market capitalization today. And who made all the money? 500 crores to 5 lakh crores market cap. 75% of this money, the wealth was made by foreigners of an Indian company. Such huge wealth. This is applicable to ICICI Bank, or you take Yes Bank, IndusInd Bank, any of these top banks, our software companies, the IT companies which created huge wealth. See, domestically, we went on cautioning people, equity is risky, don't look at that. So risky is a wrong word to use about equity investing that I have been always holding. So we went on giving wrong propaganda and misleading investing community. People went and put in money in the middle class, especially the households kept money in gold and real estate kind of and FD. All the money, all the wealth created, most of which was taken out by the foreign investors. So that's very unfair. At least now it's not late to change that attitude of our people who are advisors or whatever it is. No, we have to have a much more rational view on equity investing. I haven't found any risk in equity investing in my 28 years of profession. So that is more important. And going forward also, Indian equity is going to create wealth for investors. For investing, see, these market corrections or some sharp reactions or crashes happening in the market, like 2008, investors will not lose money. Only those who monkey jump, try to make some money and with the leverage trades, gamblers lose money on such occasions. Otherwise, last many decades, Indian investors have been making money. It will continue to be like that for the next many decades. That's all what I have to say.
Right. Also, now one trend that we have seen in the last 1 or 2 years is the domestic investor has matured. He is investing into markets maybe through mutual funds, SIPs, even directly, in stocks. Now there are two ways of looking at it, especially those who are not invested at this point, and we do cater at Zee Media, we cater to a very large retail investor base. There are some who are feeling that they are left out, market already 35,000 ho gaya and we are not invested. Now they probably end up looking at stocks which are part of large cap index and maybe end up delivering 10-15% CAGR. Then there are some investors who are risk takers or who believe in the long term story, and they end up in making investments in maybe mid cap and small cap and end up making multiple returns. At this point, what is your advice to those investors who are not invested right now? I understand your point that long term you are bullish and you do believe that the bull run is here to stay. But those who are not invested, who have not had their first-hand experience with markets at this point, what would you advise them? Where should they look?
I think it is 2:15. There is still time for investors to start investing. They are not late. And see, you have to have the big picture on India. There is no choice. And as I told you, this cautious approach, one need not go on reminding about it. Now there is a structural change happening in the economy. This is like unprecedented here. One cannot underestimate this, or you cannot underplay this. This is once in a lifetime thing happening in our economy, which is going to transform the style of functioning of many companies in India, especially the so-called not so professional companies. They all are now forced to become professional, become shareholder friendly, and they have to now create wealth through the market capitalization, other than siphoning off money kind of things. So this is a big game changer for the domestic investors if they keep their eyes and ears open. So in mid-cap and small-cap segment, we have hundreds of great companies, but they are not priced very high in the market still. Don't look at the latest year earnings and the price earning multiples on that. Some of these companies are getting into a different growth orbit. That is where these people, skeptics, go wrong. They come into a very different orbit of growth than the last many decades or last many years in some companies. So that's a game changer. So maybe some of these companies with a great relevant business, and their stock price might have gone up 2 times and 3 times in the last few years, but it may be still worth it for a beautiful compounding. Now it is true, the plentiness of the the potential multi-baggers are coming down. You have to work hard to find such huge multi-baggers going forward, because that number is coming down among these few thousand companies. So that I definitely agree. But there are decent compounders. If you can compound your money at 25-30% for next 5-10 years in India, in a stable our currency environment, it's amazing wealth creation here. So I am finding hundreds of such opportunities in the mid-cap and small-cap segment, which can give you 25-30% CAGR for next many years. A lot of them, not 1 or 2.
Yeah, a lot of them. So can you name some of them?
Actually, I am a fund manager now. Most of the stocks I have picked, or I have been, because of my style of expression, perhaps most of the stocks are known in public.
Yeah.
Not everything, but at least 50% of my stocks in portfolio management or personally what I'm holding little. Now that's all known outside. So I have been talking about the infrastructure segment, and since last 1.5 years. And some of the stocks which I picked, I'm still looking, they are looking still good, like J. Kumar Infra, Simplex Infrastructure. We are holding both these stocks in portfolio management. And see, now people have been all asking what happened to GVK. GVK I've been buying from 8 rupees a few months ago. But today the price went up too much, from 7-8 rupees to 26. So that is also not healthy. Investors should not chase stock like that. Nothing changed in GVK. So people have to be price conscious and price sensitive. That's something I am very much worried about. Here the new investors coming in, the amateur investors, they just come to the market and buy anything which is hot, anything which is fancied and what people talk about, or somebody bought at 10 rupees, you buy 30 rupees. That is not the way to invest. You have to be extremely price conscious and price sensitive. So it should be slow. Maybe the stock can still go up, but too fast movement without big change in the fundamentals, especially the new amateur investors should be careful about such kind of run-up.
First of all, Porinju, I was reading some of your views, and you are one of the strong believers who believe that the rally in market has just started, and India has a long way to go as far as bull market is concerned. So where is this conviction coming from?
Good afternoon, I'm here. This conviction is basically, I would say, it's because of the big picture view.